Good evening, everyone. Welcome to the second webinar in the series, which we are doing in the process of helping the MSMEs in particular and capital markets in general during the COVID times, and see what we can do in the best interest of all of us in the ecosystem. Before we start the session, a few housekeeping points that I would like to share with all of you. I request all of you to stay on mute and as much as possible keep the videos off. It will be helpful in terms of saving the bandwidth. This is going to be a 1-hour session. We have got some distinguished speakers who can educate us both from a regulator insider view perspective as much as from a practitioner or a promoter or a corporate perspective. We will take you through the further details as we progress in the session. But this is going to be, as I said, 1-hour session, broadly divided between the speakers' questions and the audience questions, moderator's questions and audience questions. There is a chat which is available on the Zoom where you can post all your questions. Most of them, as much as possible, shall be clubbed, and we will take that up. And wherever specific questions are there, we will take that up specifically. Try to stay as relevant to the topic as possible when it comes to your questions. I understand this is a wider topic. So with that, we will move to the session of today, Unlock 1 and Roadmap to the IPOs. IPOs, as you all must have heard, stands for Initial Public Offering. It is a very important milestone in the journey of a corporate, journey of the promoter, and a very important element in the overall capital markets of any economy. It's a testimony of the trust and confidence that the promoters can instill, the corporate can instill in the minds of the regulators, in the minds of in the public in general. For the first time, they would kind of decide to go to the market and say that, look, here I'm able and willing to take public money and use it and return with profits in a sustainable manner. Subject to a lot of regulation, we have moved. As a country, we have progressed quite a bit, and exchanges are one of the important players in the ecosystem where these stocks get traded. Today, we have with us Ms.Rachana Bhusari, who is the head of NSE SME, and she's here with a purpose, which is that we have so far been talking about the main board listings. That means the large companies which have reached certain milestones, gone through certain important capital market events. But what is it for example, we have got to offer for the small and medium enterprises? Is it as difficult, as complicated? Are there any specialized and more liberalized, eased out ways to do? Just to give some information to all of you, when NSE, BSE, and a lot of regional, BSE, as you know, stands for Bombay Stock Exchange. Like Bombay Stock Exchange, there are a lot of regional stock exchanges which have been formed, and NSE was to play a very complementary role, encouraging some of the things which globally, if you see, NASDAQ is meant for technology, then there's London Stock Exchange is meant for commodities, alternatives, etc. NSE was also to play. But as an emerging economy, we all had ways to evolve. And after evolution of NSE, BSE both together building a lot of market, NSE is still stuck to their original objective of providing platforms to small and medium enterprises. Ms. Rachana Bhusari heads the small and medium enterprise platform, which is called NSE Emerge. I don't really intend to share more details because it's a personal thing, but it's not even a week since she had a major personal loss in her life, somebody very close passing away. She's right in the thick of that grief, but thank you so much, ma'am, for accepting to come here and spend time during a personal grief of yours and wanting to share these details. That shows your commitment to the purpose. Please welcome Ms.Rachana Bhusari to the webinar today. We also have another very important, what a lot of us would be look at from an aspirational perspective, Mr. Sunil Reddy. When we were just having a talk a couple of days back about this webinar, he asked me, are there any restrictions on the background which he needs to use for the Zoom? So sir, I want to answer you. You don't have to worry about your virtual background, sir, because you have got a very strong real background, and it's my privilege to share the background of Mr. Sunil Reddy. He's the chairman of, he's the managing director of Dodla Dairy. He has completed his BE in Industrial Engineering from Manipal Institute. He was in agro products business for about 6 years before starting Dodla Dairy in 1995 to provide high quality milk and milk products. And today, the operator, which started in Nellore as a milk processing unit, today has operations besides India in countries of Uganda, Kenya, and Singapore. And they have gone through the full cycle of the main board IPO. This would be a very interesting learning from you to all our participants here. Thank you so much for joining. Like our previous sessions, and while we'll continue to do it, this is not for profit, and the names of NSE Emerge and Dodla Dairy on the poster that you have seen are more acknowledgements. So besides besides them, I would also like to acknowledge some of the others. FinOptions, which is an Indore-based financial institution which is providing this, which is hosting this Zoom for us. And SRIX is an incubation based out of Warangal, and a lot of friends at Odisha Corporate Foundation, etc. All of them are not-for-profit initiatives. I would like to thank all of them, and now get into the main subject. Sir, I would like to, sorry, ma'am, I would like to open with you this session. These are very unprecedented times, right? We are at a point where we are talking about survival. In this situation, it would be really audacious to even think of going to IPO, which is largely a momentum sentiment. There's an IPO which comes in a bull market, there's an IPO which comes in a bear market, and they're completely different. That too, in those circumstances, we are talking about IPOs for MSMEs. Your opening remarks on the current times, how markets are being viewed from a listing perspective.
Thanks, Kalyan, for organizing this session, and thanks for having NSE as a partner to this session. And a very informative session is what you said. NSE has been taken on board, and I'm here to ensure that deliverable from you to all the audiences present here. And Mr. Sunil, it will be a pleasure to have you listen to your experiences of going through the IPO process. So thank you once again for having me on this platform. And yeah, I'm here to explain from an SME entrepreneur perspective about what is a SME entrepreneur can look out for an IPO, what is the alternate funding mechanisms that are available to him, and what is the NSE Emerge platform about for him to tap the funding mechanisms. Yeah, of course, this is an unprecedented times, and we have never ever, even in our wildest of dreams, thought about a business coming to a standstill, the economy having challenges with respect to even running your day-to-day operations. So this pandemic has never been heard of. We never even felt that we could ever get into a situation where we won't be able to move out of our houses or carry on our businesses regularly. And all these measures to contain the virus infection has led to slowdown of the business, or actually no running of the businesses. And it's a challenging time which most of the entrepreneurs have been going through in the last two and a half months. And SMEs undoubtedly are the backbone of any economy, and so is it true for the Indian economy as well. And it's not that SMEs were having a great time before the lockdown. Anyway, there were struggles and challenges the SME segment was facing prior to even March. And come the March and April and May, and we saw the wider impact of the pandemic hitting them, and already the fledgling SME segment was struggling further. Now, during this time, if we have to say about the biggest challenge they will have is running their businesses as usual, or in the new normal post the lift of the lockdown, which I think most of us have seen the unlockdown one happening and mission begin again starting. So the immediate challenges are going to be getting the business on normal track, immediately getting your workers back into your force, starting your production facilities, ensuring your supply chain. So obviously the horizon of an IPO is not going to be on the immediate minds of any entrepreneur currently. Though the funding requirement would be the largest challenge that he would be battling with currently, but maybe IPO mechanism or the public market mechanism will not be the right or the immediate priority on his mind, because like you started saying, that IPO is a journey. It is not a one-day event. IPO is a journey, and this journey needs preparedness. This journey needs thorough information consolidation. This journey needs integration with various intermediaries. So this is not something which can happen overnight. But having said that, it's very important for entrepreneurs to be aware of the fact that yes, there are alternate funding mechanisms that are available to them. It is not that they should be, or they have to fund their businesses only through the conventional methods of their own funds, or from the friends and the family that they could get the funds for, or the banking channels. It is important to take cognizance of the fact that yes, there is a platform which facilitates alternate funding, fundraising through the public route mechanism, and 200 companies at NSE have already taken advantage of that kind of platform. And these 200 companies put together have raised more than 3,000 crores of funds. So on an average, if you look at 15 crores to 16 crores is the average issue size that we have seen on NSE. And for an SME company, this kind of money also makes huge difference for him to propel his growth and actually start his business onto a newer growth path altogether. So I'm here to tell about how different it is to list on the main board and how different it is to list on the SME segment. There are clear differentiations which have been made so that entrepreneurs, small entrepreneurs, do not find it difficult or a cumbersome or an onerous process to list onto the stock exchanges. Post listing also, they should not find it as a difficult exercise that oh, we're burdened with listing. So post listing also, there have been fewer compliance requirements post rested on these SME companies, and they have fewer disclosures to make, which helps them actually navigate the process of even post listing very smoothly without any onerous and burdensome compliances with them. So this platform has a very simplified framework, has a very lower eligibility norms. So if you look at from the regulator perspective, the only condition that has been stipulated by the regulator is that any company with a paid up capital of less than 25 crores is eligible to get their shares listed on the SME platform. So having said that, NSE also stipulated several conditions about hygiene checks, or to ensure boost investor confidence. We also levied certain more conditions, which is again very simple. They are about having a track record of last 3 years. The company should be in operations for the 3 years, and out of the 3 years that they have been in operations, 2 years should be profitable. And being sensitive to the fact that there could be huge capital expenditure that these companies would have invested in, so we take profitability at the cash profit levels and not at the net profit levels. So again, the companies are given a benefit at depicting profits at the cash levels, cash accrual levels. So apart from these two, and the company should have a positive net worth. So apart from these simple criteria, there's no additional criteria that has been stipulated to the SME companies. For the process to be less cumbersome and to be quicker, because it's the essence of time is very important in funding. It's not just that you need funding, it's that you need timely funding. So if you lose the time or the right moment to get your funding, maybe you don't need funding anymore. Maybe the opportunity is lost and you wouldn't want to invest again into that kind of an opportunity. So taking cognizance of this fact that, it's timely funding that is required, the regulators have very aptly said that in this case, the approvals would be granted by the exchanges directly. So the SEBI approvals are not required. SEBI observations would not be given to these issuers. So this facilitates the process to be quite seamless and quite timely, I would say. From my experience, what I have seen is that a company can get listed within 3 months of they deciding to list onto the exchange. So this process is that fast. The post in principle stage or the IPO stage is as similar to the main board. So you have an IPO which opens for a minimum of 3 days, can be going on for a period of 10 days, and after the IPO closure within 6 days the companies get listed onto the stock exchange. So that process remains the same again even for an SME company. With respect to post-listing disclosures, the quarterly disclosures have been given away, and only the companies have to make half-yearly disclosures onto this platform. So that's again, for the companies who were in the group or who were in the habit of providing once in a year financial results, for them to move to quarterly suddenly is again a challenge. So in this case, we gradually they have to, from an yearly, move to a half-yearly perspective and then submit the disclosures on a half-yearly basis to the exchange. So that's again a very important leeway that has been given on this platform to the SME companies. One important point that I would like to mention at this stage is that this platform provides an option to the promoters to seamlessly migrate from the SME platform to the main board platform. So for a corporate who wants to, actually, I think it's an aspiration of most of the entrepreneurs to be a listed entity. And the aspiration is always, what I have understood is aspiration is always to be listed on the main board of an exchange. So, this process seamlessly facilitates that aspiration of a promoter. So once they get listed on the SME platform and they are on the SME platform for 2 years, they accustom themselves to the various disclosures that are required under the regulated environment. The teams get used to the discipline that is required for a regulated entity, and after 2 years they have an option to migrate. It's not a mandatory stipulation, it's an option to give into the companies. So this is again a beautiful feature that has been provided via this platform for companies to meet their aspirations to be a listed entity on the main board. And this is technically this can be demonstrated by around 30 companies, more than 30 companies of NSE SME platform migrating to the main board of the exchange. So it's an achievement for these promoters that they were on this SME platform. They came with smaller dreams and aspirations to get themselves listed, and today they are trading with the big wigs of the financial markets or the capital markets. So important feature again from an SME perspective. The opportunities and the benefits are galore for listing on this platform. Listing also has several challenges. Like I started my statement saying that this is not going to be an immediate kind of a roadmap or a top item on the drawing board of a promoter to get themselves listed, but this has to be in their bucket list. This has to be something which has to be there, that yes, examine the feasibility of being a listed entity. And while this lockdown has thrown several challenges and a need to review the way we've been doing business, this also should be reviewed, whether I should prepare myself to be a listed entity. And if yes, I am eligible to be a listed entity, and if I need to walk that path of being a listed entity, what is that I need to prepare myself from today? What is that I need my team to know that, this is what is required to be walking down the path of or the journey of being a listed entity. So this time is about preparing yourself, gearing yourself up to meet the future challenges of funding and being ready for tapping this alternate funding mechanisms.
Sure. Thank you so much, ma'am. And I'm sure there are some recent, on account of the COVID, there's some further relaxations which have been announced in the recent past. We'll come back to that and discuss in a little detail. But before that, I would request Mr. Sunil Reddy for his opening remarks on, sir, how are you, doing, what are you drinking now? During, other than Dodla milk to keep.
So thank you very much, Kalyan, and I'm honored to be here on the same panel with ma'am here. Kalyan, drinking always anything healthy is always good for you, including Dodla milk, which keeps the nutrition going and people healthier. But as I was saying, these were unprecedented times where things were happening and what was going on. I think we're lucky to be where we are, and we hope that we'll continue to go forward and doing better. But coming back to this topic of your going for the IPO, I'm here mostly to share my experiences. Dodla as a company has grown as a startup, as a greenfield, and we have grown and we are here. We started way back in '95, and as you said earlier, we also went through the IPO path. We've gone through the path of venture capital to private equity, from private equity up to the stage of filing our DRHP, but didn't go for the IPO. But I would like to share my experience from starting from why IPO to when IPO to how IPO is where it comes in. When you look at it, I think with my experience, what I've learned is the most important thing is to look at the why IPO. Like Rachana ma'am was just saying, IPO is not just the end-all story. It is the beginning of a career, in terms of a beginning of a path where you have to continue to go. Once you get onto that path, you have to be make up your mind to go on to the growth path. It is not like you borrow money from a bank, you repay the bank money, and then you're on your own. Your governance requirements will be larger. You're responsible to a larger audience. So the question of why, yes, aspirationally we want to be there. We would like to raise money to start growing bigger. But we must look at it as another form of currency, to be responsible to people, to have continuous growth of what it comes to. So from a mindset frame of it is, when I started as my life as an entrepreneur, if I am running a company, my view would always be it was my company and I can do what I want with it. Once you're thinking of listing from a governance point of view, it is you should not think of it as your company in the psyche of a promoter. To make that explanation simpler, I'll give it as a classic example of I used to have only one credit card before getting on a partner. So I would go spend on that one credit card thinking it is my company, what is the difference? Now saying two credit cards, meaning company expenses separate, personal expenses separate. Yes, I now live with what I take as a salary. I cannot book something which is, it might be in form of the company expenses, but they have to draw a line. So to become aware of that and saying that you're now with the larger audience who people can ask you and you have to be responsible is a major mindset that we have to make. And when you get onto a call, when somebody asks you a question about why is it so, not to get perturbed. People will say, oh my God, if you go listing, you'll have so many people asking you questions, analysts after you. But I look at it more as saying, what's wrong if somebody is asking what your business is and what you do? Must be people who have a lot of knowledge and experience, who come and help you to better your business. So do not only think of going IPO as a money-getting machine, but it's a long-term thing that you look at it. And if you take care of that long-term machine, then you are in great shape because people trust you and believe you. And then you have this seriously good long-term capital available for you at the beck and call, where you don't have to worry about other things and go forward. But being open about it, being transparent is a big change that we have to get in our mindset. It's like, when you project and you think of your future numbers and you're talking to people, and bringing back to the beginning of the conference where you came and when I asked you first saying, should I have the backdrop of the company at the back or not? It's basically a governance issue, right? I'm supposed to adhere to certain things, which before going for a DRHP or a listing, I would have never even thought of. But now it has been brought into my head that there are certain things where you have to be careful and how do you go about it? So the why of the IPO becomes very important from a promoter point of view as what you're going. It's not only the money, but a much longer term view is what you must think about. The second is when. Right? So when is much more important once you decide on the why, because when you do the when part of it, it's the timing becomes all important. At a certain time, this company might be the same. Your company results of what you were talking about year 1, year 2, year 3 would all be the same. But you go into a time when the markets are good, you get a lot more of traction. So you shouldn't get worried about no, why is no, why is it low now? Why is it high? And the timing is something which is multiple reasons. It's not only in the hands of the operator of the business to decide, right? You might have done a great job. It might have been a great year, but the markets might not reward you for it for something else. Not to get disheartened, to keep going. The third thing is the how. The how is, when I went in, I made the mistake of thinking the how was the most difficult part, that the when would be easier, and the why I know very well, and whatever it was. But now with the experience of going through, I realize it's the other way around. The why is more important, when becomes the second most important thing, and then the how is the easiest of the things. In the how, I made the mistake of thinking, right, first of all, it has, I need to go to an iBanker, I need to file my DRHP, the process. That is the simplest part of the things to do. Provided you're a company which has got a reasonably good governance, you've not done something which is dramatically wrong, you're not hiding anything there. It's not draconian. People scare the daylights out of me saying, oh my God, there'll be so much of work to be done. That work is good for you. It cleans up your books. It cleans up your system. If I don't have a legal document for a thing. So again, a similar example, my license has expired. I didn't look at it. When I went through the DRHP process and I had to give proof, they said, well, your license is expired. Where's your license? Please renew your license. It is that much of a cleanup that happened also. But it was great, right? It's nothing wrong in that cleanup happening. There was nothing that we had to hide or whatever. But most importantly, for the when and why, valuation became a challenge also, right? You have a certain notion of your valuation. So I would rather first get my handle on that, meet a couple of the investors who are going to be my anchors. I think it's a chicken or egg story. I'm sure the anchor guys who are putting money into your company have so many people coming up to them. They don't have the time. But to shaft that, to shaft off the people, go to a few people, get a feel of what they think about it, and then go for it. And the third thing, when you go and talk to them, you'll realize that they're also in the business of making money. They're not there as charity or dole for somebody to get money, right? They're there to, you invest and they have to make money along with you. It is not that they're giving you money and you make money yourself. So to understand from their perspective what they think about it, and they will have a lot of different views. Each person will have a different view of the industry. Some of them spend a lot more time into divulging into your industry. They might compare you with others. But having the patience to explain your thought process, get the right people on board who are interested in what you're doing, and then go forward. So I think that is where it is more important. So why, then when, and then the how is the thing. So in the how, first thing, to meet the, the iBanker, ask him to make you meet a couple of investors and get their viewpoint before you start going forward. Because then it's easier that you get a feel. Otherwise, you go with some, the markets are booming if there. But end of the day, physically, the person who's going to put money into you is the key people. And it's better to meet them and then start the whole process. Get your thing of your why and how does it resound with them, and then take it forward. So that's been my experience, and that's what I'm there to answer any questions or share with other people. Thanks, Kalyan.
Thank you so much. Thank you so much for sharing the very different perspective. We would have got a chance to hear good doing companies having gone to IPO, good doing companies not having gone to IPOs, but somebody who has actually gone through it and at a very crucial point with this kind of environment. I think this will be a very, very in-depth perspective. I'll come back to you with a few questions a little later. But before that, I'll go to Ms.Rachana to a couple of success stories. See, just for the information of everyone, I think there are about 9 companies in Telangana and about 2 companies in AP, which have been listed on NSE Emerge. And a couple of success stories or interesting stories which can be a great case study for our audience to listen and understand. The previous point quickly, which I touched upon in terms of further easing out of the regulations which have been announced in the recent past.
Okay. See, like you said, Telangana and Andhra Pradesh have been very actively contributing towards the SME platform, and we have multiple companies listed from this platform. So if you look at a company from Telangana called Whosis Consulting is already on the platform. There's a company called CATSYS, which is on the platform. Visakhapatnam, we have a company called RKEC Projects, which is doing wonderfully well with respect to being listed on this platform. So there are multiple companies. I'm sorry, I'm just taking a few top of the mind names, but there are multiple companies, and it's not that I'm promoting these companies, just about that, these are the companies which I think people will immediately relate to because they are from the same area. So that's how it is. But my experience with the promoters is that they've been they're very happy with the decision that they have taken to come on board as a listed entity. They have had multiple challenges post-listing as well as pre-listing, but those are challenges which could be smoothened out, which could be ingrained into the way the company operates its business, and then they become a routine process for a company. So I have not heard of any company tell me that we're not able to meet the compliance requirements of being a listed entity. I think that's never been the challenge. Every company which is listed on this platform finds it. In fact, they say that they appreciate the compliance requirements, because they say that this is putting our teams into a lot of discipline, financial discipline, our teams into a lot of marking their deadlines, so that this is the way that we have to do. We cannot be non-compliant. We cannot have a penalty for non-submission. So it's getting the way of life to be into the regulated environment. So that's one advantage which, from my experience, companies have shared with me over a period of time. The second part is about, and Mr. Sunil Reddy touched it upon very beautifully. He said that, as an entrepreneur, as a promoter of any company, we are not, we don't like being questioned about our business decisions. We don't like being questioned about, the way we're leading our businesses. But yes, another important thing is, once you're a listed entity, once you're a public limited company, then you have your board structure in a particular manner. You have a requirement of a team in a particular manner. And it's always that this expertise adds value to the business. The questioning adds value to the business. It's somebody is attached to you, not to question you, but to grow your business in the positive manner. So if our promoters are even happy that, they are getting an expert advice, they're getting an insight from a person who is not attached to the company, who's independent to the company, but he's still able to lead them and advise them as to what is good for them, which they sometimes miss because, of the part that, this is my company, I can do what I feel like doing with this company. So this kind of discipline is also what the promoters have been very, very appreciative about. If you ask me for a real life experience, one of the companies approached us that I think I can get myself listed on this platform. So obviously the company was fulfilling all the eligibility criteria. So just out of curiosity, we said that what triggered you to think that you can get yourself listed on the company. So he said that some big company has approached to me wanting to buy me out, and they see value in me. When I realized that they're seeing a value in me, I said there must be some value in me which I can cash upon myself. I don't want to sell out my business. I want to be on this business on my own. And if somebody else is seeing a value in me, why can't I see the value in myself and take this company to the next step and see whether others are also finding value in my company and getting into a wealth creation path with me. And this company then got listed, and it's even migrated to the main board. So these are things which trigger that yes, I am somewhere there which I've missed because it's always like this: when you're part of something, you don't see what others are able to see the value in you. But so he realized that, and he got himself listed, and today he's on the main board doing very well, exceptionally well. On the I would say on the profit side, or as in the prize wealth creation side, I think he's done a wonderful job with this journey. So there are, I think every company would have a different reason. Like Mr. Sunil Reddy also said, the why is very different. But after you have a firm why to that why do I want to go for listing, the path is something that initially would be a challenge, but the benefits at the end of the day are amazing, and I think very fruitful, very fun filling.
Ma'am, if I can just take a cross section of the kind of companies which probably go for listing on platforms like NSE Emerge. Like, you have got a set of companies who, what they call them, disruptive ideas, innovative technologies. There should be a tipping point beyond which the growth suddenly becomes non-linear, product development, research, etc. which are most likely an area of interest and a hit with venture capitalists and private equity firms, more of venture capitalists which can provide early stage money. For example, when you're talking about 25 crores, we are in the venture capital world talking more or less like about $3.5–4 million in terms of, or $3–3.5 million in terms of investment, etc. So that is one category, which is probably. The other thing, which is a large section of Indian businesses that you see are ones which don't necessarily have a disruptive idea with them and may not be a great hit with the institutional, concentrated, high risk, high return investors, but may find a lot of value for the retail and other institutional investors who can anchor and participate in companies like this. So do you see that the SME Emerge as a platform is a source of equity funding for such people? Is the expectation right? Because one of the challenges that I have seen as an investment banker for years is the expectation mismatch. Whenever I have participated in such events which are targeted for SMEs, the expectation from them in the form of what kind of capital to be obtained, whether it is equity or debt, if debt, what sources. We heard a lot of news, we heard a lot of policy announcements, but we are not able to get it. So I want to have some clarity around that. Is it what kind of companies should expect a platform like NSE Emerge to access capital?
Okay. Kalyan, see, any company which has been in the growing phase, okay, has already had a proven business model, is the kind of a company who could look at NSE Emerge as an alternative of funding mechanisms. Now, the investors into this kind of a platform, by regulatory requirement, it is only the informed investors who can participate on this platform. So any trading in the primary market or application in the IPO market or even in the secondary market can happen only lot size of 1 lakh and above. So, the intent is very clear here that this platform is meant only for informed investors. It is not for the retail kind of guys that can get themselves attached to this kind of a company. From what we have seen of the listed entities that have been on the NSE platform, the ultra HNIs are the ones who are getting more interested towards these kind of companies. And an important factor at this point of time I would like to mention is this is not something which is like a short-term gain platform. This is something which is kind for a appetite for a long-term investor, because for a company to actually absorb the funds and show the benefits of the fund, take an advantage of the fund infusion that has happened into the company, and the results to be shown is not a 1 month or a 2 month kind of a job. It's at least a year and a 2 year, that it takes for us to show those benefits. So this is obviously this kind of an investing opportunity is for guys in the long-term space. It is not in the short-term space at all. So we always, when we talk about NSE Emerge platform, we keep reiterating this factor that, this is a kind of a long-term investment platform. Do not look at it as a listing gain day advantage kind of a platform, because you need to be there with the company to see the company grow and then capitalize on this as an investment opportunity and grow with the company over a period of time. And the promoters are generally, they start small with smaller valuations on this platform, and then gradually as the company progresses its life on the Emerge platform, we see the valuations turning better, and when they finally migrate onto the main board is when we see the real unlocking of the valuation happening there. So I think this is what every entrepreneur and the investor should bear in mind about these kind of companies. And it would be wrong to say that we've seen not large investors participating. We have seen institutional investors participating even in the SME segment, and the efforts of NSE have been consistent in this manner that we get credible investors, we get long-term investors into this kind of companies, so that we are able to even show or we are able to actually garner interest from the larger institutional investor fraternity, which adds credibility to these companies. And then we have the other set of investors coming in to attach themselves for this wealth creation path. So I think we've seen generally this mix of ultra HNIs coming into these companies, and there would be local investors also who have seen the company. The channel partners of the company would become an important investor into their company because they've grown with the company earlier. They've been attached to the company. They know how the promoters, how the business has been growing. So they also become, they become a part of this journey of this IPO, and post IPO listing also they remain with the company for a longer period of time. So that's how we've seen.
Sure, ma'am. I think this philosophy is getting very clearly established that the investors who come typically, even in case of a listed. So I would kind of take this conversation further with Mr. Sunil Reddy because he has mentioned earlier about the need to have an anchor investor, and though we are talking about listing, we have always seen HNIs, UHNIs, all of them have investments in private companies in some form or the other. This is kind of a next level in terms of creating a platform for all these more people who can come with more confidence, transparency, etc., and participate. But the same thing, sir, seems to be applicable even in case of the main board listing. You need to have anchor investors. You have yourself gone through the private equity route. One investor staying with you for 5, 6, 7, 10 years. Now, looks like it seems to be not suddenly largely moving away from that philosophy. You still have long-term investors. Equity as such is meant for long-term investing, of course. But instead of anchor investors coming, taking that big leap of faith, endorsing you, committing you that long-term capital, then there is a distribution. Can you just elaborate the whole thought process, how a promoter should look at that piece in terms of moving from one investor, promoter money to private money to public money?
See, when you move in with promoter money to private money itself, it's a huge change in thought process, because as I said, from the point of view, you've got a partner on board. You're no longer the only soul on board. And that's when the process starts about thinking about how do you get on board a partner. So it is easier when you're sitting in a boardroom with 1 or 2 partners and sitting and having a discussion about what do you feel as a long-term strategy, and there's a lot more give and take before you move forward. From there, when you move to the larger world of the publicly listed space, it's difficult to play. Everybody will have their own view. So who are the ones who are going to stand behind your view is the key. So that is where the anchor investor becomes a more important person, because you need somebody who's also believing in your thought process of where you want to head, how do you want to go out. There are lots of people, few of them like your idea, few of them don't like your idea, few of them like your sector, few of them don't like your sector. So keeping in view the long-term part of it, because like Rachana ma'am was saying, one of the why of the IPOs is also the value unlocking from a promoter point of view. So that if the money is also in the company, a promoter needs money, he's got another form of liquidity in his hand, right? If you divest a small portion of your equity and there are a lot of people who are willing to buy your equity, if you have a need of money, it forms another way of getting money, not only as one way of getting the money from the company is from the dividend point of view. One way of getting the money is from the value point of view, right? So from there, when you look at it and you're going forward, that value, when you want to unlock, must also have people who believe in you and buy. It's unfortunate that sometimes when there's a promoter trying to sell, people think something is going wrong. But if it's communicated well, the unlocking of value happens. So in this process, when you have a couple of good anchors who support the system, if there is something dropping for some reason, somebody needs the money, they have to go and liquidate, there'll be somebody there to support you and back you and take you on, because you're not going to be interfering in the market on a day-to-day basis, right? So you need at least 4 or 5 people who believe in you and the company and are there to take care of it. So the anchor investors are a part of your core partners, is what we can call about it. The retail investors will be the ones who will be having a lot more confidence if you have better anchor investors also, because they know the pedigree of the anchor investors who are there, who are actually also a part of the team and guiding the people and going along. So in the long run, as the anchor investors are going to be there for longer and there's more of the growth of the equity that is coming in, then you have also the liquidity available. If somebody needs to sell, you'll have somebody to buy from you. So in this game of buying and selling, it is not when everything is going on well, that you need all of this. These are more required in bad times, right? If you take the present scenario that is happening, when you see valuations of companies dipping so dramatically, if you had more of guys who added value to it, who were there willing to stay with you for the long run, the value drop shouldn't have happened, right? They've taken and kept a few of the large cap companies as saying, look, okay, if I need to withdraw, I'll keep the best companies with me. The others that I'm not sure, or okay, I have a smaller stake, I'm going to move out of it now. So you need those strong investors who will stay put with you. So when you move from the board to a larger public distribution and you want to get people to believe in you, to learn in you, is when you need these people to be along with you. So that is the importance of the anchor investors. So the anchor investor is a guy who believes in you more than the other guy who's not.
Because we have, of course, have audience across, but predominantly one form or the other in some regional centers. Sir, when, of course, there are a lot of great companies which have come from smaller regions than otherwise financial hubs such as Mumbai. But certainly you fall under the new age now. Promoters have gone to the gone down that path. Can you share experiences as a regional player in terms of what are those interesting things that you have noticed? What is that? What are challenges that you must have faced in the process of being a Hyderabad-based investor, liaising with a lot of perceptions and facts which are around, you know, oh, there are a lot of brokers, there's a lot of nexus which goes around the brokers and some of those guys, and stuff happens out there, and it's a big world out there, right? So how did you navigate through that, if you can share your experiences?
See, I would rather use the word iBankers and banking system, and rather than use the word as a broker, as a one who is doing it as in between. Most of these guys are the guys who are there to ease your path of it by saying that they have the knowledge about it, they know what to do, and try to make the process simpler. But in the fact of it, the day when I had to first go into BSE and give my presentation or talk to them about whatever doubts they have, or the NSE, I was amazed with the professionalism of the institutions. I mean, way beyond and far beyond what we can expect. As it is not, it's nothing to do as, you know, most of us have this fear of these large institutions. I mean, it was very warm, it was welcoming, they were aggressive. I mean, if you take from an NSE point of view, they also go helping you out by saying that if you need, you can use our offices if it is required. So it was an amazing experience to go there. So you don't need to say that I need these fancy name which has to be there. That is the reason they will, you know, I will get the entry into these kind of institutions or the anchor investors. If the company itself is strong, you are confident, you are good enough, you don't need some big brand name to go along with it, right? You go along in your own way. The bigger brands, yes, maybe are required if the size of the issues are large. You need a lot more communication across the globe. You want to go into the global markets for somebody to explain. I feel mostly it is because when you look from a global market point of view, each investor has got every day 10, 20 people coming and pitching to them. So somebody there to take you there to show you, explain to you, be careful. You have only 5 minutes of time to discuss when it is in the bigger stage of things. When it's the smaller stage of things, I guess if you're a strong company, investors are also looking for good companies. Everybody wants to invest in good companies and make good companies. So it falls upon us as the promoter or the guy taking the lead forward to show the strength of his company. That is primarily important. Exchanges, the fear is minimal. I mean, it sounds initially before you go down the path, yes, it's scary, but once you walk down the path, they're the easiest and the simplest to handle with. It's just a checkbox of ticking that we can sit and do what issues like ma'am was saying. Yes, initially it will feel painful because you think it is not required, but then you have to go through the process. But once you complete the process, it's a huge relief 2 years down the line, because when somebody comes and asks you for something else, you have everything done and it's there with you. So from that point of view, I think you should not worry about it as the name of the broker or the name of who it is. Go with somebody whom you're comfortable with, whom you have your ability to pick up a phone and call and talk and look at it. Don't go with the intention that if I have some big name and if I spend more money that I'll get larger valuations. That doesn't happen. People in the investment community do not go by the name of who's taking you there. It's the end of the day your job that you have to pitch your company, you have to show your commitment, and you have to take it forward. So that's what is my experience. The names of the people in between do not matter. The company, the strength of the company, the strength of the team within the company, and how you go and explain that to people. Because any investor is not looking at what you're going to do next year. They're more looking at you as the promoters or the team of people who are behind it. How long are they going to push it? How well are they going to take it forward? So it's very easy to project it in Excel and give numbers of next 3 years of growth or whatever it is. And for heaven's sake, never underestimate the investor community. When we went down the path, I was surprised that some investors have physically walked down to where we operate as a chilling center to find out if what we said was right or wrong. I mean, it's also their money and their responsibility, right? So it's not some fancy paperwork that you do as an Excel that others will listen to it and money gets thrown across. You have to be genuine. And if you're genuine, it reflects very quickly in the markets and the people who are investing in it. And at the genuinity, we get a lot of people who you might expect a high value. They might give their reasons for why they want the value to be a little lower or a little higher. You must go with a bit of flexibility is also the second thing which is there. Do not be rigid in what you think as a number in your mind. And that's what it is. So do not get carried away because somebody in the middle, because you use the word as a middle, if they give you an expectation of a very high number and this is the number we'll get you, therefore you want to go. Do not run after the number. The number is only a one-time issue. You go with the high number, your investor has to be rewarded for investing you at the high number, means you must perform that much more in the days to come to get the reward. I rather go with a lower number, let my investors be happy, let them also make some money. And if they make some money off the table, they're going to be behind me for the longer period of time. Going with a high number just because somebody said so is also not a right thing to do. Because as Rachana ma'am was saying, as I've also been saying, going into the market is a long-term story. So people must be happy that they've made money out of it. Not by some fancy deals that have been done in the market, but by the performance of the company. The performance of the company is good, and tomorrow for some reason, like what is happening now, the stock market, the price might crash, but you as a promoter can lift your head high and say, look, it's not my fault, my numbers have delivered. My ratios are strong, my ratios have improved. So I am not the one who's to be blamed at what happened. If I had gone with the next ratio, I have delivered better. So that confidence is what must the promoter must. He should treat the equity markets with more respect than even a debt market. Although with the equity markets, I might not have signed my property or given my hypothecation of my property which they can come after me. And it might feel like, oh, equity is a simpler way to get money. In my view, that is a gold mine, which you should never ever disrespect. Take it through the whole thing. If you have the ability, go forward and take it. If you try to use it, yes, you might get away with it. You might make a little bit of money, but then you've lost an opportunity of a lifetime for the future. If you try to do the short-term gains because somebody said so, you listen to somebody to solve a problem of one, you go into the markets to just solve some immediate problem. It is wrong. So never listen to what others are. You be clear. But that's the reason I come and keep on saying you be clear with your why. And if you go strongly with your why, it rewards you in the long term. You go with short term, it's easily seen through, it goes away. So do not listen to people who are coming to you with short term solutions. That's my 2 cents on it, Kalyan.
Sure. Thank you, sir. I was remembering, I think, a quote from Ayn Rand. You have a choice to think that you are at the end of a history or beginning of one. So IPO seems to be one such cusp where you say, look, I have done the value unlocking, moving on, which probably can be a reasonably short-termish view, whereas you are all set to create more value unlocking to everyone together is what the journey to be embarked seems to be very clearly from what you said. Now, ma'am, I've got a couple of questions to you on some common questions around the mid-market listing. One of the probable concerns around the liquidity around it. What's this whole thing about the liquidity? I mean, I'm just asking you for the sake of the larger audience. Even if you get listed, there may not be enough liquidity, the stock may not be traded, you may not really start realizing, or price discovery, as they call it in the market, may not happen often. Of course, you have very clearly explained earlier in the right fashion to give enough clarity that the real value unlocking most of the times happen at the larger board, and the good path to that. But during this journey as well, how does this whole liquidity thing play out? What's your experience, and what is being done in terms of market making and other initiatives by you to improve that scenario?
Kalyan, I think it's a very apt question, because this is one of the biggest concerns which keeps walking down the promoters about post-listing liquidity concerns. And I'll just again I might sound repetitive to you, but it's very important to understand that yes, this is not as liquid market as it is as the stocks on the main board are. The SME segment is not a very liquid platform, and there are multiple reasons to it. One, I've already said that, here the lot size is in multiples of 1 lakh and above. So this is a clear indication that, the retail kind of investors do not get into this kind of investing opportunity. They are not, this platform is meant for a separate category of investors, which is the informed investors. So that's one thing about, the real retail, because in the main board, 15,000, 20,000 is the minimum application size that you can apply for. But here it has to be in multiples of 1 lakh. And so that is one place where, we see not many people wanting to come up with that kind of investments in the company. The second what we have seen is that, these companies are not, their outreach has not been excessive across the length and breadth of the country. They are very locally known kind of companies, who are well known and well accepted brands or, corporates into their own regional places. So we see investments happening into these companies from the known fraternity of these promoters. And that is why if you look at even the SME, the minimum requirement for an IPO to complete is 50 investors. So, assuming that, we do not have a larger base of investors in the main board, your minimum requirement for an IPO to succeed is 1,000 investors. So with 50 investors on board, assuming that the minimum number of investors get into this to complete an IPO size, the question of liquidity is not very then relevant here, because how much could a 50 or a 55 or a 100 or a 200 investor trade within themselves on a regular basis? So that's again one thing which is by the design of the framework itself, it doesn't offer a highly liquid platform per se. The third important element that I would want to point out here is that it's a long-term investment platform. Please understand that it is not something which you are going to be churning a portfolio on a daily basis and you are going to be having a vibrant liquid markets. This is SME segment where the companies will be able to show growth after a period of time, not immediately. So please look at this investment opportunity from a long-term perspective. And if every investor is looking into a long-term perspective, then what I feel is that it's not something that liquidity should not be concerning them. Having said that, would illiquid stocks or would illiquid markets encourage investing opportunities? The framework itself has been designed in such a manner that in case you have a market maker, you have a compulsory market making happening into these SME stocks. So every security that is listed on the SME platform has to have market maker for 3 years. And the role of the market maker is to provide mandatory liquidity. So regulatorily, in case of a genuine exit or an entry opportunity, lack of opportunity is not the case here, because the market maker would be there who would give the buy quote and a sell quote on a daily basis. So this provides mandatory liquidity. So I think overall the framework has been designed in such a manner that people don't get stuck because of lack of liquidity by the presence of a market maker. But yes, at the time of investing itself, do not get your expectation settings right, that this is not a platform which is going to be a highly liquid platform. This is going to take time for a company. And having said that, again, it's not that trades don't happen in SME segment. We see volumes on the SME segment even on NSE, and we see trades happening. If out of 200 companies that are listed on this platform, on an average, I have seen at least 80 to 90 stocks trade on a daily basis. So that is again not something. But yes, again, they're restricted. They're not many. There are not multiple trades that happen. But yes, the liquidity is a challenge. But I think the platform is designed in such a manner that you cannot expect a high liquid kind of trading daily. So that's how. That's.
Yes, fair enough. I think that expectation mismatch is the biggest issue. But I think it's clear both from promoters' point of view and investor point of view. We're almost time, but one last important question I would like to ask you, ma'am. For startups, are there any opportunities to access the public money?
Sure. SEBI and exchanges, both SEBI at the main board platform, or SEBI has a platform, or has given up a framework for startups or disruptive technology companies to list themselves onto the stock exchanges. And this platform is called the Innovators Growth Platform. There's a separate carve out or eligibility criteria that has been defined, understanding the nature of their business, understanding the lack of profitability that would be there in the company, right? And in these startup companies, the cash burns that happen in these companies, a separate eligibility criteria has been defined for these companies, and criteria has been put in place. However, we've not seen a listing happening on the IGP platform till now. But I'm sure, you know, the framework is in place, and as and when the conditions are better and we see a vibrant IPO market, I'm sure this platform also would be seeing listings happening in the near future. And on the SME segment also, we have carved out a different eligibility criteria for companies which are in the technology space. So for companies who are in the technology space, who do not have profitability, you know, who do not have profitability, we have carved out a separate eligibility criteria that in case you do not have profitability, but you are a company incorporated under the Companies Act of 1956, and you have been in this business for at least 3 years, and you have a pre-institutional participation of 10%, then you know you can qualify yourselves to get listed onto the stock exchange. So there is a separate carve-out that has happened even for the startups.
I see. Of course, the startup definition has itself been redefined in the recent past to give a wider
yes.
perspective. But
yeah, it includes all kind of technology companies. If you want, I can circulate the PPT, which will talk more about what is the process for. We can do that, Kalyan.
Sure. Very clearly, the interest is to not extend the time any further, and hence I'm forced to stop this. It's 5:30 now, but this is a recorded session and we posted on YouTube, and we'll try to put as many links as possible available below that, including the small slides that I did a sharing during the process about NSE Emerge, and I'll also take about the startup from ma'am and do it. But thank you everyone for joining this, and thank you Mr. Sunil Reddy for taking out your time and sharing your experiences. It's very useful, sir, because as I said, inspiration always comes from next benchers. I mean, of course, you're certainly a front bencher, but still, as a region, people would draw more inspiration when they see close to home examples. Thanks for taking out time. And ma'am, thank you so much for taking out time for this session. I don't intend to really repeat it, but at the pick of a personal brief, you have taken out time and explained this with so much of stoic. Thank you so much. We owe a big deal to you for that. And Abhishek, who is in your team, thank you for coordinating. And Abhishek heads the region for NSE Emerge, and everybody else, including the initial acknowledgement I made. And you all have a great time. Hope everyone get out of it.
Thank you so much.
Yeah, thank you, Kalyan. Thank you, Mr. Sunil. Thanks, Emerge, for coordinating. Thank you so much.
Thank you. The session is now being ended.